wealth. Remember to subscribe, like, and share these videos. In tonight's videos, we're going to talk about why fundamentals just don't matter at the moment. Let's get into tonight's video. Welcome, everyone. I guess we'll start tonight's broadcast out as apologizing. The Substack newsletter was written on time, but wasn't delivered because there was one more button to push. I thought I'd pushed it. I walked out of the office. It was late, so I apologize. It did get out about an hour and a half before the end of the day. I apologize. So, let's talk about a couple things. Something that I talked about in the letter that most of you didn't get to read. It's out there now if you want to go check your email or go to Substack. But you can see what's going on is all the metrics. I talked about this on the last video I did last week, is that everything's coming in line. It's almost like the books have been cooked and all the estimates just kind of come out. We saw that happen today. Just look at a number of things that came out, and they came in exactly as expected. You know, the housing is terrible, and you know, all those numbers come under. Every other number comes in about the same or marginally on either side of what's being projected by analysts. And this, to me, just is one of those times where you really don't need, I'll say they're not needed until they are. Until we have something blow up, some metric come out, then people will focus. But at the moment, no one's even looking at this stuff. Some of the earnings obviously we had a lot of big earnings already behind us, so there's not anything really there. And we still have a number of weeks and plenty of information to come out on earnings, but there's not really anything happening from the standpoint of any fundamental shift or even reason to expect a fundamental shift. Imagine one day when housing becomes a topic that we want to talk about. Right now, it's just kind of out there. I'll cover the Treasury bills tonight, or not Treasury, the Treasury bonds, the 10-year tonight, because I think it's significant what's moving around in there and the messages that might be coming out of there. Of course, we're seeing Japan shift their books around and finally starting. I think they're just protecting their currency, but there's definitely some things going on in Japan that we haven't seen for a while. So there's a bit of a different regime going on there as well. So there's some shifts going on the planet, but nothing material that's going to affect this market. I did see something interesting, though. I was looking through some things that I look at often, and there's a group of money managers that basically a sentiment comes from them. Guess what they did? They got bullish in February. No wonder we're down a bit here in February already, and it's not bullish. So they're always lagging. You want a good lagging indicator, watch these guys. The main reason I know for a fact, and maybe this person is even still watching the podcast I met several years ago, but they work at a large fund company, and this individual actually runs the fund, but they have a fund manager, which is the front guy. I won't mention the name of the company or anything, but the front guy for the fund, he's the guy that goes on Bloomberg and on CNBC and talks to people. He doesn't do any of the trades, nor he probably hardly knows what's going on most of the time. And that's typically the people that you see interviewed on CNBC. You know, I've told you folks many times that it's okay to watch CNBC or Bloomberg. Just make sure the sound is off and you'll be good. Just look at the numbers that are being presented. Occasionally they have somebody that's intelligent enough that knows the market that's not a figurehead for a mutual fund or for a broker dealer, one of those folks. Most of the so-called head analysts, if you look at Europe, every head analyst in Europe is, don't call me don't call me any names. I'm just saying what they are. Like 90% of them are all women. Doesn't mean they're not good. I'm just saying they're just there's so many different people they want as spokespeople. Is what I'm talking about. They'd rather have a pretty face on there talking the company line than some guy that looks like he actually runs the portfolio. And that's just how the industry has been set up for a very long time. And, so the true analysts, the true traders, the people that are making things happen behind the scenes never they're truly behind the curtain. In that case, I'd say pay attention to the man behind the curtain. Usually I quote, do not pay attention to the man behind the curtain. But in certain circumstances, it's appropriate. So I think what's happened here with market sentiment, and this is my point, is that the markets are actually into a phase where it's just locked in. There's no surprises expected. There's no reason for any surprises. We've all been watching not looking in the rearview mirror, but as we drove up the road to where we are right now, we've seen what's been going on, and all the markets have been very stable. The economy, there's nothing out there that's causing any additional volatility other than a few stories that might kick in that on AI or something like that that's causing sentiment to change. And in real terms, for you to get a true sentiment change, you need something behind it. So fundamentals do matter. You want to understand what's going on, but right now they don't matter just because of how they're positioned, and there's no reason to worry about them. So now you can go back to earnings, go back to your charts. Your quant stuff should work pretty good right now. And last night, I'm sorry you didn't get to see the title for last night's newsletter was, Wall Street's trying to get you bearish, but I'm telling you why you shouldn't panic. And this is what I'm telling you right now. The numbers, they're all good. We're seeing some volatility in the large caps, so there's definitely a rotation. I think right now, NASDAQ is down 2.9. Russell's leading the way, I think up around 6.5, 7. I'm going off memory here. And here I can tell you. Mid-cap up 7.9. Russell up 6.9. Dow Jones, no one cares, up 3.1. S&P flat. NASDAQ down 2.9%. And that's just some of the air that's come out of these big tech stocks. And that's okay. There's actually a reasonable rotation going on. And I'll show you here in a minute. We'll go through the database, so at least you'll be able to see that we're still getting positive traction in the database on an intermediate level. So I didn't get to do a video yesterday because of the holiday, but let's, I think we're ready to go in there right now. And yeah, let me see here something. Yeah, that's somebody just said the database hasn't run. You're absolutely right. I'm looking at, I can see more than you. There's still portfolios in the queue. As soon as they're done, we'll run. So what we'll do is we'll come back to that. I'm just looking at the run real quick here. Matter of fact, let me show you folks. This is a good break. This will be an interesting break. If you're a WaveTech user, this will be very interesting for you. So let's go ahead and let's go over to that. So here's a bunch of portfolios that are in my queue. You can see if you see where I just, let me zoom in. If it says run queue, it says run through 12/17. These are completed. None of the database will update until all of these run queues are done. And you can't see, I think there's on this one here, I think there's about 3,000 or 4,000 portfolios that are running. So if I hit on here again, you'll see each time I hit it, these, I think they run in alphabetical order so that this will finally get done. So I'm gonna go ahead and show you something. I think I have it up here. Nope. Here we go. So I ran this is the new overlay for, there's a little more, I'm almost all done with this. My guy is back off of vacation, so he's working on the member site and some of the new scripts that I'm going to put up here. Let me just go here. Yeah, so if we come up here, this is what WaveTech will look like. You'll do 3 screenshots. Right now it's going to be hard code just to enhance the experience. There's a couple things here. So you'll have this script. It's a PSX file. You're going to need Claude, and you dump this into Claude. It will just make this any portfolio. It's still tested. I broke it yesterday on one portfolio, so I fixed some things on this yesterday. But basically, this main part where it's dark, you'll have the script for this, and what it does is it goes through and redoes all the analytics. You see the mouse overs, it'll show you what sector. It also tells you what percent is in that sector and long. There's a bunch of other stuff down here. What I really like about this new sheet is in the past on WaveTech, so hopefully the database will be done when I'm done telling you, but this will take just a minute or so. So hopefully it should be done here pretty quick. It goes through all the drawdowns, but down at the bottom, it has, let's see if I can get this big enough so you can see it. Let me get off screen. Down at the bottom, it has an executive summary. So it goes through and does all the analysis on the numbers. In the past, those of you use WaveTech right now, you get WaveTech and you got to figure out what the numbers are telling you. So this is going to break down everything that's going on here, any symbols that are getting stretched or anything like that. It knows how to do all this analysis. It's going to be WaveTech with intelligence. WaveTech is an old product, so this is a kind of overmake. And then on position, it shows you some what percentage of the portfolio it's in, and then it shows you if any of the sectors. It also shows you, which I love this, it shows you any symbols that you have in the correlation of each symbol, which tells you that these two symbols, that's almost like one position. It's like 80, I think it's 84. Yeah, 82 you see over here on the far right, 82, 81. So these symbols here are highly correlated, which means they're almost like doubling up on, that's like one position. And then you can go through the analysis and see this is what the performance is and all that. Then down at the bottom, it's going to tell you the correlation analysis here. So it's got a big bet in industrials, which is good because that's what's moving the Dow Jones and some of these smaller cap positions. So, and in very near future, there's going to be a way to do an analysis of your current constituent list and some other things. So this is kind of the rebuild. It's a little manual input, but it would be worth your effort if you're a WaveTech guy. And then the bottom line, it gives you the portfolio achieves diversification against 8 sectors on this particular portfolio I put in here. So that's interesting. And so I'm going to do a quick review. So I'm just going to drop, there's a risk. It's going to show you volatility risk, also do the analysis at the bottom. And ultimately it gives you this little bottom line. It tells you the risk profile is consistent with well-designed momentum system. It knows how to talk to you and tell you what your portfolio is doing. And this will only work the way it's telling you if you follow all the trades and percents and all that. There's 2 more tabs I want to show you. This shows you which symbols are in what system. And then this is the dotted line is the S&P. And the blue line here is the correlation to that. And it's showing you rolling returns and where the strength has been, this portfolio's done pretty good. But looking back, it's been lagging a while. So, but anyway, let's move on. I'll do a full video on this. There's a heat map to show you month to month how this portfolio is performing, and once again, return analysis and a bottom line. So you know that's been a big issue for people using this product, is that they don't know that what it's telling you. And then this here is quite a bit of statistics here. You got the value net. So this started, let's see what I had this set at. Yeah, so this is January 23. This portfolio, I think, no, that's all it goes back to. So it's just a year and a half. So if you put 200K in there, you get 274 right now. Tells you all your analysis. Right now, the alpha is a little bit off, but KGAR, you got everything that is telling you. And you can even put the cost of your subscription in here. Right now, it's set for 1% if an advisor was charging you 1%. It's interesting, if I go to the monthly plan, watch the KGAR over on the right, it goes down 9.9. And then if we come down here to the annual plan, then it's 10.14. So it shows you what your fees are to run your portfolio, all that stuff, including what your cost is on everything. So, okay, let's hope this this thing is done now. Yeah, so it's going to be a big upgrade. Like I said, there's a couple more features that are going to come in, and then there's going to be, and where you're going to get this is a free, there's going to be a membership site, and the scripts will be right there. You download them. I'm going to do videos to walk you through that sheet, that quick, that I just went through. So that's coming up real soon. I've been promising that, and I'm just waiting for this membership site to get there. And this will, I'm telling you, if you're using WaveTech, you're gonna love that. So, all right, let's refresh this page. All the cues are gone. I'm betting that we'll go to the research here right now. Let's go to, you know what? I want to stay on weekly because a lot of you didn't see that. So we'll get through all this, but thanks for listening to that because I'm pretty excited. I put some pretty good work on this this weekend to get this thing cleaned up. And it should run, when I release it, it'll run on any portfolio that you built. And there's 3 quick screenshots. I'll even suggest some screenshot software for me that's really, really easy to use. And you'll need at least a free Claude account. Okay, so here's what happened on the Friday's run. We were 65% bullish. Now we're 67.92. Even though we had about a 2% down week last week, we are still getting more traction in the database, which is always interesting. The only thing that happened is we got a sell in financials. So financials are out, which is interesting because rates have been going down, but the financials are out right now. And so now we have 9 sectors long, but here's the big number, 67.92. So almost 70%, 7 out of 10 stocks are long in the database and expanding. That's the key on the Kendall report you didn't see last night. This was all covered. I apologize again. That was all on me. There was one more. I thought I sent it out, and I did not. It was totally on me, and I was out. I was out of the office all day until about 1 o'clock my time, which is like an hour before the close. And yeah, Bo, thanks for calling me. Your alert was huge. Thank you. So anyway, this is the breakdown. We still have lots. The only sector that's long in the tooth here is capital goods. And then looking over here at the sectors, most of them are very early on in their, so This one's only 1/3 of the way through its holding period. Over here, everything is early on in the cycle except for capital goods. So there is, from a sector viewpoint, there's a long run, potentially long runway ahead of us, still going up. And that's why I keep telling you, do not panic. Do not buy into, what's this guy, that poor man, rich man, or poor dad, rich man guy? That guy needs to disappear. Right? He's been bearish for like 6 years or something. And now there's a crash coming, and he's buying Bitcoin. So sell Bitcoin, buy the equities. That's what that tells you. It's amazing that we're still getting traction here. This thing does not lie, and the accuracy has been proven. This box has been running for over 25 years and has run a lot of real money. This is not, hypothetical. It's hypothetical from all these buys, but lots of money has been run through this thing and still is being run. So yeah, this is interesting. Let's go over to the daily. This is where there's a bit of a contrast, although daily popped back pretty decent. So after today's run, we've got about 600 new buys, about 175 sells. So we got a net positive going here. And then on this one has 10 of the 12 sectors long. And there's a couple basic materials have been long in the tooth, meaning it's met its typical holding. So I am looking for basic energy, this would be consumer cyclical, and then down here is the transportation has been in play for a long time. It's up as a sector, up 24%, and a 69 of 30, so it's doubled its holding. So that's another good sign that transportation is getting so much play right now. That's another sign I would not worry about I'm going to do the big collapse, the big sell-off that people are out there screaming about. There's a rotation going on. I just illustrated, I told you, mid-cap up 7.9, Russell up 6.9. That was called a number of months ago that we're seeing a shift. And so some of the accumulation of new trades that are coming on are from those asset classes, both small cap and mid cap are coming into play. That's why we're seeing the database expand. Some of the stuff that was on before that might be tech or larger cap related are still in long. They may be consolidating at a high level, or they're topping out, getting ready to roll over. And that is what I watch for here, is to see if there's any big rollovers. Right now, on an intermediate, this is all that matters. We're still forward looking out June, July to a minimum of the first chance for even any kind of material decline. Now, we're in negotiation. We got a bunch of global issues that are out there that could pop up at any moment. There's always something. After being in these markets for over 4 decades, almost 5, there's always something out there that everybody's worried about. And now in the world with this high note, they basically added, like, if they added more sound or more noise by social media coming involved, YouTube videos like this one, all kinds of people screaming at you. This looks just like some pattern that happened 22 years ago. It's going to happen again because of that. Just know that kind of analysis is worthless. Don't ever engage in it. It's just worthless. For every 20 of those that people find, 0 works. 1 every 100 years works. People are always comparing, look, it looks just like 1929. No, 1929. Rear view mirror investing only works when the road's straight. When you hit a corner, you drive off the edge. So keep your eyes up on the front windshield. Do what I always tell you. You can only see as far as those bright lights will show you, and you watch for a corner and you slow down, you take profits, you do different things with your world to adjust for those type of risks when you see them. Until you see them, don't worry about them. One of my buddies used to say, it was one of my very first mentors, he always used to say, expect more of the same until they show you something different. So you need, even like what I was talking with the fundamentals and the news, you need to have some disruptors, something that happens that changes the narrative that deserves to be looked at. Not just some little blip on the screen and, NVIDIA went down for 5 days in a row. So now that means the AI bubble's bursting, the world's coming to an end. All those kind of things is what I'm talking about. You just that's why I show you this database. This database doesn't get distracted. It doesn't hear any of the noise. It looks at the numbers. It's all math. And indeed, when you look at all of the markets, it's all math. It's when you get into ideologies. I mean, Bitcoin folks just found out what ideology will do for you, and conviction, right? I see that name all the time. We have a conviction. The markets don't care about your conviction or your ideology, but the math doesn't mislead you. You can have that stuff in the background if you want, but it can't guide you, because there's no hard points where your ideology no longer is true. You even believe it or you don't, and that's the problem. So you have to have some other guidance, even if it's on 50% of the position. You've got to have other guidance. Okay, time to move on, and let's go ahead. I appreciate everybody going through some of the stuff I went through tonight. I don't even know what is the Dow. I don't even know what that is. I haven't looked at Dow Jones since 1980 sometime. I don't know. It's somewhat relevant now as a basket because there is a rotation there. So maybe it's worth looking at, but it hasn't been from a large money management environment that I live in still, but once upon a time was quite large. That's not, you don't want to look at the Dow Jones, but so I know it made it over 50, but I mean, that was a few days ago. So anyway, yeah, well, that's a funny comment. I know I shouldn't do this. Pam Bondi cares if the Dow is below. I don't know what that's supposed to mean. Yeah, you're right, Floyd's Garage, about Robert. Yeah. Well, you get a good book, you can pull that off, I can say at least once in a life had a viral X post, and I learned a lot from it. I got confirmed on some things and learned a lot from hanging around those folks. And so let's go ahead and let's bolt over. It's going to come up first with NASDAQ. Let me switch it over to ES. Okay, this is monthly, so let's get down. Maybe this was happen for a reason. Let's do this. So we've got some fib targets up here. 70, 71, 70. Hang on. Uh, 71.42 was fib target 2, fib target 3, 77.64. That's these green lines up here. And you can see we're trying to roll over. We've broken through the second derivative. So this is the key element, though. I'll show you. So PPM1, 1.89. That is for the 10. We're at 1.51 on PPM2, PPM3, 1.39. I've showed you folks that probability map. So this tells us right now that there's actually less than a 10% probability for the market to decline below the 10-month moving average. Let me break down something I'll show you. 10-month moving average is equal to basically the 40-week moving average. Okay, so we'll go to the weekly next. But you can see that there is forecasted declines. Gets ugly way over here in 28. But you can see that the algos, the WTARs, the predictive moving averages are showing that we're flattening out here. So it's probably not, I just got to check a value here. Yeah, it's not until June, interesting enough, where the database should start to peak out, that we have a probability to start to decline, maybe come down into the 21-month moving average, which at that time will be 64, call it 65 handle, or 68. So even then, it's still like a 5% potential decline. And anything that gets close out in the, and I'll obviously talk about this out in the future, will be, that's going to be a huge support level there, looking out a little way. So let's go down the scale now. Let's go to weekly. You'll see that there's I was just talking about the 40 week. So right here is the 40 week. So let me zoom out so I can get you a value. That's going to be 65.80. So I'm going to call 65.80, 64.80 as the bottom end of the range. And that would be over maybe the next two months. Meanwhile, I need to point out something. We're just looking at the database at that 67 level. That's pretty much where it peaks out, 62 to 68. And then all it needs to stay, and we saw this in 23 and in 24 during those rallies, that we stayed above the 60%. It was actually 61 to be exact. And we stayed above that level. So we'll be watching the database to see if there's a shift on database that will start to point probability further to a further correction. But we're probably, the rotations, what we're going to pay attention to, the Russell and the mid cap is where money's flowing. It's cheaper there. There's some value. It's almost a value trade, not just a asset class trade. It's a value trade because obviously with all of the top end NASDAQ stocks, that's why NASDAQ's down 3, S&P's flat, and the others are up on the year. So that rotation is going to continue. So from the database viewpoint, that's going to keep to play in unless we start to fall way back under 52, 48%. So that would take months. So we've got, those of you who've been around for a while know I love where you start to see clustering of ideas. So you start to see a clustering around, this June date that keeps coming up from that. I could dig deeper and show you plenty of other things that are telling us the same story. So when I get a clustering of things that are telling the same story, then that's where we're likely to extend out. That it may not play out as much in the S&P, certainly not the NASDAQ, but we'll hit, we're going to go through the NASDAQ next. We're going to hit key values on the NASDAQ where the buy the dip trade is back on there. And that will happen. So there's going to be plenty of good, it's February yet, right? So we've got plenty in the next 4 to 6 months. There's going to be plenty of moves in these ranges to trade off of. And probably the more steady trades will be the rotation trades, which is Russell and the mid cap. All right, we'll go down one more level here, and then we'll go over to the NAS. So this is something I showed you folks last week in a video where we're seeing this a bit of a broadening of the volatility, but it's what I call the caterpillar. Typically, these can end up to be a bit of a distribution from and put us down. So here's what I'm going to show you. The 40-week moving average, which was the target. We went monthly, weekly. they all correspond, that number down there at 65 handle. If we look here, and we just kind of forecast out 65.98, you could argue if it came down fast, 65.84 is the 200. The 200, if you think about it, a 40 week has 5 days in it, basically a 200 with a slightly different calc. They vary just a little bit, but the 200, the 40, the 10 month are virtually in the same range, and that's one of those clusters. That's why 5,500, 5,580, somewhere in there, we start to get close into that lower band. That's where a bottom will likely happen, and it's likely to just continue to bleed off. And once again, I want to tie this together. The WaveTech database percentage bullish may not tear off as much as the NASDAQ and the S&P are illustrating this weakness because of the rotation, because I think that money will search out some cheaper and better ideas that have probabilities of momentum building in, which will be the small cap and the mid cap. So that rotation is full on, and the only thing we have left is my other scenario, which is that we want to get to the steepening yield curve, 75 to 125 basis points. That's when the mid cap and the small cap are going to kick in, and really that's where they get some serious traction when we get to that configuration. All right, so let's go ahead. So let's go. We'll go top up to a point here. Let's go to NASDAQ. See, we're getting close. We already got pretty close to the 200, so we've already hit that. So this will map out the same way. The reason why I designed the 10, 21, 40 period moving averages on the different time series. So time series daily, weekly, monthly, those, and that could, I'm not sure what the intraday cycle would be, probably could figure it out, but what you want is your next time series to trade. You can pick up, there's sometimes where I will say the intermediate trends are dominant right now, and the daily is just flopping around. That would be the case right now, is that the noise we're getting out of all the dailies, that range is more defined. The lower the time series, the more volatility. So reason why, for the most part, managing large portfolio managers of portfolios with stocks, we use weekly, because it's just the right amount of noise to identify 200-day, 250-day trends. And that's where you're going to capture big chunks of these stocks. So it's like a football game. Those are where you're going to find the most deep balls to the house for a touchdown, is in that weekly mode, not in the daily. Daily, too much frequency, too much noise. So same thing when you're doing analysis time series here, you want to use probably daily, weekly, monthly. The reason why the 10, 21, 40, 21 was a Fibonacci. We actually started with that because it was a Fibonacci. But way back in the mid 80s, we used the 10-day simple just because it was better. Some people still will argue about, some kind of exponential weighted moving average. I'm okay with simples. It doesn't matter what you decide to use. Just understand how the market and the characteristics play around it. And I spent all my time on simples 40 years ago, and I figured out how to make it work. So that's why I do it. You can go, oh, he uses simple, he should use this. That's fine, use that. Just understand the movements around that so that you can actually just, you're an analyst, you're a trader, right? So you just need to understand your techniques. My techniques have been tested for 40 years. You could be better. I'm just telling you, understand the noise. So this is one of the elements, especially with the algos that we can see now with the WTRs, which are using these indicators to project out what the moving averages are going to do. So you can see like this 200 down to the very bottom here is showing a decline, forecasting a decline in momentum. You can see a little rounding in the 200. The 200 is going to be obviously the slowest moving average, and that's why it's used so much. And that's one of the things that will map out. So what we get here, though, is we get this wedge. Instead of you and I drawing this wedge here, the wedge is showing you that the 10-period moving averages, everything's ultimately centering at 24,702. So over here is, at least at the moment, the projected turning point. So we get above that pivot point. If this was a very clean formation that's on there. So those of you that have the indicators, you can get them. If you don't have them, www.kendallreport.com/indicators, and that will get you. And but this is the perfect setup, at least for understanding where the pivot is. So the pivot's going to be right in this mid-range here, and it's going to put you at 24.7. I'm just rounding off to the nearest number below 50, right? So that will get us to the pivot point. If we break through that, then you're probably going to go negative and go down to the 200 or toward it. The red dots are forecasting basically a range between 24,791 and 24,503. So you can look at that range being forecast. I have it set on 8 days out. When you see that range, and that's kind of your expected trading range. If you're trading options or doing straddles, you can move around those numbers and usually be pretty safe that they're going to stay in there. And you could go to the next moving average and do straddles on that. That's probably one of the better ways to play a pattern like what we've been in. So recently we don't really have a new regime, like a new trend coming in here. What we have is really just more of the same at a little lower level. So we're still consolidating. Going back to the whole broadcast that I've done tonight, is what we're seeing in general is that the markets fundamentally, the news that's coming at us, even the earnings, nothing really big surprise that's going to blow up the whole market. I remember way back when Big Blue IBM was a dominant stock and it was announced, it was 1989 mini crash, that they were going to lay off all these executives. And it was a white collar layoff. No one ever heard of that before. It was always blue collar workers and execs set up in their cushy chairs. Well, they blew out a lot of people out of IBM. And at the time, my comments on that is this is going to be the next wave of new startup companies, because they threw some really big people on there. Well, the companies like Cisco, and you can go down the whole Silicon Valley expansion in that 1990s, and the whole dot-com thing, that all came partially from IBM and others that did that white collar. Those were all the new companies. You look at the founders of a lot of those companies, it'll blow your mind. And, you know, it was pretty obvious to me they laid off a bunch of really smart people that were smart enough to compete against the people that were laying them off. And that's exactly what happened. But this whole pattern that we're seeing here is just locked down. I mean, could we only outside of a somewhat like a black swan event, you could maybe see something blow up if something unexpected happened. It would have to be geopolitical, something that no one saw coming. You know, the fact it's not going to be because Europe's worried about Trump's tariffs. Okay. They should be worried because they're going to keep paying. He's not going to bend those rules, I don't think. But the point is that's not something that's going to change sentiment. It's already out there. Black swans is something we don't know about, and that always is a possibility, especially with the world we live in now. But, you know, something goes sideways in Ukraine or who knows what, right? So we don't know those things. I mean, I think Rubio's down in Cuba right now trying to maybe negotiate the new 51st state. I'm joking, of course, but certainly trying to break down. They're squeezing them pretty bad with the Venezuela situation. But that's not going to be probably a bomb to go off. It could be. I don't see why, but I'm saying it's going to take something really big, unknown, to change market sentiment, to change what I'm telling you right now. And if that happens and we deal with it, we were ahead of the pandemic crash. Those of you that were then or still are institutional clients, you know, we were selling like crazy in January, right before the pandemic happened. And people were calling me like, Bob, where are we getting all these sell signals? I'm like, we were at all-time high, if you remember, right before the pandemic. So a lot of these stocks played off. So we're in a much different situation right now. We've got the database in a position where only about 30% of the expected returns and holding periods are gone. So these patterns are going to continue. I'm going to click on weekly. I got to move on because we're getting a little late in the show here. But these are all important things to watch out for. So here's going to be this. This gives me a bit of perspective. So this is the 40. The weekly, but if we look at the 40 week, let me just see, get some numbers here. Yeah, so pretty much no matter what, it looks like in the next, into April, May, even though we're below here, if you see where my cursor is, those numbers are still positive numbers in momentum, even though they broke through some peak numbers. They're still maintaining, even way over here where it's flat, the projection is still a positive upslope to that. So the probabilities are if we hit that 40 in this sequence, let me blow this up. Trying to do this quick, but this series analysis, be nice if I could do this in 4 minutes. I appreciate everybody spending the time with me. But this here, if we get down to this 40, a simple 40 is going to be your buy the dip. And this I was talking about when I was covering the S&P. That's going to be your point on the NAS to be stepping in here. And we're still locked in this little triangle. So the upper range is going to be 25,237 on the downside, probably right around here at 24,400, which is about where the lows have been in this sequence. So it's very possible we've already got the low in here. It could print a little bit lower and that this thing will stall. Even though when I show you these PPMs that they look like they're weaker, this looks negative. It's not negative because of the values, and this is really almost like a correction. And then you can see where we start as we get into April. It looks like momentum wants to come on again. These things will update as we get real data. But right now, around April, we could see this thing we're in now, February, March, and then April, we'll start to see a bit of a seasonal pop on that from that standpoint. So hang in there. Somebody says you have the indicators. Be grateful if you could start again. I have the indicator. Yeah, so Andrew, this will be some of these new scripts. When I get this membership, I'm working on a script that you'll take a screenshot of what you see right now with, I think there's a total, it shows 9 here. I think there's 10 though. Yeah, there's a total of 10 indicators on this page. You'll literally take a picture, a screenshot of this whole thing and dump it into Claude. And I'm going to give you some code, even be a TSX or JSX file. You'll just drop that file in there and hit enter, and it's going to do a complete analysis and give you trade setups and give you the analysis right off of that screen that you dump in. You can dump it in as many tokens as you have on Claude, but you'll be able to do this. You'll even be able to put it on an hourly chart, any length of chart. So it's basically, I'm giving you as much as a virtual Bob as you can. So it's kind of a wrapper on top of the indicators. And then you just drop this script in. Hopefully my buddy in India will get this thing done and we'll get it set up so you can get the downloads. And I'm going to do a video to show you how to do each one of these. So there'll be download file, there'll be explanation, and then a unlisted video that you'll have to go to that spot to get it off of the YouTube channel. So once you have that, then you're going to be good to go, and the Wave Tech guys are going to love me a lot more when we get this done. So it's really going to help everybody, and we've got some bundling stuff coming up as well. I'm going to do a quick, I should do an actual real survey, but how many folks, now it's not going to, I'm going to do a potential master class in Vegas because it's easy to get to. I can bring I'm 4-hour drive from where I'm sitting right now to Vegas. So do a 2-day stay there, working our butts all day. Everybody has to go straight to the hotel room, no drinking at night. I'm just joking. But, and I want to do an event there. It's going to be a prelude to the event that I'm planning on taking to Europe later this year. And if I can get this set up pretty quick, it just depends. And I'll just, but let me know if you'd be up for that. And it's not going to be a cheap, but it's going to be a serious venue. And you're going to have videos, and I'm working on producing some really quality. A friend of mine is a documentary out of LA. He does a lot of big jobs, and I'm trying to convince him to do it for me under a number so I can get it done. But anyway, I plan on doing the same thing, and I'm planning on doing London, Frankfurt, Lugano, Switzerland, and Dubai. So that's going to be, and I'm going to have my computers. I'll do my best to keep even the newsletters flow and all that. I think I can do it. So I'll have my Mac Studio and my Mac Mini with me, and probably a PC laptop. So I'll be traveling heavy. But anyway, just let me know if you'd be up for something like that. All right, let's go on. Let's go from here. Since I've been talking IWM so much, let's go over there. So just know that this setup that I showed you just now on the S&P and the NASDAQ, all of the S&P stuff flows pretty much across the board, the same analysis. Just bring up the indicators, bring up the charts and look at them. You can use 1021 simple averages. You won't have the forecast, but at least you'll be able to see where their current values are. And one of the things, a very, very close friend of mine, he could even hear this. I'm going to reach out to him, but he was one of the founders in Think It Swim. And I'm going to try to maybe put some kind of situation together where it would potentially put suggested option strategies and straddles when I talk about this, because he would be much better. He's even got several books out that's out there. So I've had him on the channel years ago, but I got to reach out to him. But hopefully I can get him to help me set up some of these scripts. That would be interesting, just to be able to bring up something. We just have to have access to a option chain, a couple little more information on what we're showing. But I think we could put something together, and that would be interesting as well, because I think that's one of the things that I've been doing for years is I give you good ideas, but I want to help you construct them a little better so that you have a higher level of success, instead of me getting a text on X or a comment on X that, well, I lost money doing that but did that person do it right? I don't know. So I want to get more involved. That's the idea of some of these training classes and other things that I want to do. I've been telling you for a while that I want to pivot more to a educational, hang on, wrong button, educational than, just pure analysis. So I'm kind of mixing it right now, and that'll be the next thing. So the Russell this is a weekly chart. We're seeing some loss of momentum. I think what this means is, I'm not going to bring out the drawing tool, is that we're going to consolidate and stay at least above this 21. And we might see possibly over the next 6 weeks, a little more relative from an index standpoint on the NASDAQ and the S&P coming back to those levels. I'm talking about right now, we're trading 68.57. If you remember, 68.70's been the bottom end of that band I've been talking about for a while. We just had a reasonable rally in the last 20 minutes or so. But the patterns that are showing up here on Russell are suggesting also that the big pivot's going to be 254 on IWM. So we could trade above, and we should stay above that level, but that's going to be the bottom end. And the top end right now, you just got to go with the highs, maybe around 270, 275. And that's going to be a range that we should probably get wrapped up in. Now, if we see more positive rotation in a database with the S&P going down, this is something that you folks watching this channel, you want to watch for, is if we get that, you'll see the rotation in the database. So what will happen is the NASDAQ and the S&P will be declining and a slight downtrend while the database continues to grow. Now, that's what happened last week. We're off maybe a couple percent, and we still saw growth in that's the rotation we're seeing. Now, if the rotation got above 72 or even up to 78% in that scenario, the rotation's full on then, meaning that money coming out of NASDAQ, S&P, flowing toward those mids and small caps. That will be the evidence that we'll start to see. And the fact that that's happening, just let me break that down. The fact that that's happening, what that tells you is most of those trades coming in from intermediate models are holding for 200 days to 250. That's a whole year in market days. So if we see that type of action, part of that bullish percent is going to roll into those two asset classes, and those should carry out. So that just tells you a lot about where you should rotate your pattern. If you're institutional client of mine watching this will be what we'll be talking about, is trying to rotate into those asset classes using individual stocks. If you're just using IWM or another equivalent to the Russell, then you don't need to do anything. That's okay, you're covered. But if you're doing individual stocks, you want to rotate those portfolios that way if that strategy is ready to do that. Yeah, I think the Vegas idea, I don't know if you guys seen that new Oakland A's stadium they're putting together. You can't play baseball in the summer in Vegas. Okay, it's not going to work. 112-degree days are going to be tough ball games. All right, so let's see. Russell, let's go to the 10-year. This has been really interesting, what's going on in the 10-year. We've seen some pretty serious buying coming into the 10-year, pushing yields down to the 200. So here's the, they say the $64 question is the red dots are projecting that we're going to go through this, projecting 367 right now. We have Fibonacci targets. Let me move this over so we can see these. Well, look at the Fibonacci targets, 371, 335, and 314. I don't know, is that our new Fed chair? Is that what's going to happen? If that happens, then Fed funds are going to be 2%, 2.25%. Seems a little bit outrageous right now, but we've got everything in line for this break. This is somewhat surprising to me. I think the last time I covered the 10-year has been a number of weeks ago. I thought this 200 was set to be solid. It's now, if we look way down at the bottom here, let me go off screen so you can see this. Go down at the bottom, we started breaking through this. For those of you who have the indicators, don't ignore the ppm 200. This right here is where it crossed. And when the 200 crosses, it starts to trend like this one is and continuing trend. That is usually the top of the market. I took, real quick, I took all of the data from, so you can come over here and right here, you can, if you can see my screen, let me zoom in on that. Right here it says download chart data. So everything that's on this chart will show up. And I dumped all that data and I gave it a few very basic rules for all the indicators, and I had it run them as a group trying to find, it was a Claude run. I said, tell me which one of these indicators had the most accurate signals. And believe it or not, came up with the 200 as a one and all. And if you have seen these sheets, I did something on the new sheets, folks. And I don't know if everybody saw these or not. Bear with me, I got a lot going on here. I've got to make this, all the screens are good. Okay, good. So I'm going to bring this over on the page for you real quick. All right, so this is the Claude worksheet. And what I want to show you here, I built these new gauges. And this is basically making a composite. By the way, in the indicators, you can make your own composite indicator. There's one in there that allows you, it puts all 4 indicators in one and you can weight them. So this right here is giving a secret away. This is the weighted blend. You can build this on your own if you have the indicators. So you can get all of this right here. ppm 1, 40%, 25, 3, 215. So I built this indicator that's called like a sentiment indicator. And when you do this, it kind of gives you that 200. I've even built one that is weighted a little bit more toward the 200. Hang on. This computer is getting swapped out. Hopefully I didn't destroy us just now. I was able to recover. Okay, so the reason I bring this up is that 200 was definitely a signal signaling this new regime down in yields. We got a little bounce and now we're back down. So maybe market sentiment is starting to play into the new Fed on his way. And I still got several of the things that he's written. Him and Bassett have written a couple pretty good articles that are worth a read. I know I've seen bits of them, and I want to read the whole thing. But anyway, all of this stuff, folks, with the indicators and everything, this is all going. I'm going to show you techniques on how to use Claude Opus 4.6 is absolutely insane. That's all I can tell you. I've been using. I started on ChatGPT and the second week of December of 22 when this stuff first hit, and I've been on it. I pretty much my go-to is Claude Code and Claude browser stuff, and it's very, very, very powerful, especially in this analytics and programming. I did that sheet I was showing you right here. I did this in about 3 hours. I've got probably another 2 or 3. When it gets done, it's going to be rock solid. And a lot of this stuff was one shot to add a feature. It used to get multiple errors and you had to do a lot more work. It's almost to the point where, even a caveman can do it. No offense to any caveman out there. So anyway, this whole regime that's coming in, this first objective here, 370, it's going to be simple, interesting to see if we can break through. There's a lot of elements in place that say yields can come back down. It's going to save real estate. I doubt it right now. It's possible. It's a bad seasonal time of the year for real estate sales, at least existing and new builds, especially if you're in the East. If you like chipping ice, it's fun to build a house in the winter. And I worked in the Midwest, and we built houses, and we had a lot of issues on houses that got built in the winter. Everything's improved. I realized that was 40-some years ago. But the bottom line is, it looks like we got a shot maybe down this first fib target. We'll see what on flows here, but I wanted to bring that up. And that could mean nothing more than, and what's happening now is the yield curve is flattening again. So that's not good, especially on the fixed stuff. Maybe the 2 and the 1s are moving a little bit, but they need to get that Fed funds down to 2. I think ultimately between 250, 2.25, and I think that's where they'll go. That'll make Trump happy. That will make the housing people happy. That will make the banks happy. You want to borrow short, lend long. It works really good at that. It doesn't. The top end yield matters to a point, but it's that spread that makes the banks work. They live on, that's their life, that's their blood actually. From that standpoint, they need that spread. Once they get that spread, everything will get a little more easy. Will bring housing cost of housing down. I'm not sure it's going to affect much of the original build. All right, so what do we got? Boy, gold, silver. I'm at hour 8. Boy, I did a bad job tonight. I think I'll just make some brief comments. I'll cover it in Substack. Promise I'll push the send button tonight. That's unbelievable that happened. But we still have this positive slope, and I've been telling you for a while, weekly gold all day long, 47 to 46.80. If you see that price, you got to buy it. Okay, this thing is still in a powerful trend. Even when we get over here where my cursor is, it looks real negative on this indicator. That's still plus 0.45. If you look at the probability map, that thing is. And by the way, that article is pinned to my Substack. The very top, it shows you that. It's got that chart there, and it's also on how to use the sheets. I've got a new one I'm going to produce real soon on the new sheets, so you understand some of the probabilities and other things on that data sheet I showed you a few minutes. Also working right now is the release of that product, which will be the ability for you to put your own data in a screen and build those things, and it will deliver it directly to your account. I think it does it'll do the full React. I believe it does the full React interactive sheet, or you can get PDF. I think there's 3 formats it will deliver on. So, okay, let's. So that's weekly gold, still there. We'll take a quick snapshot, then we'll go to silver, and Bitcoin will be done. Same thing, slight upward slope here. We do have fib targets up here on gold that are interesting on the daily. 57, 65, 62, 78, 65, 95. The old high here was what? 56.26. So that would be a slight new high. Algos are not confirming that we're seeing any acceleration, but if you have the indicators or watching the show, make sure you look and see if we start to see some momentum being projected out. For right now, we're flatlined. Like I said, you could off the 40, you could look at like 47.19. That puts us close to the number I was just talking about on the weekly chart. Okay, let's go silver. Silver is just an ugly pattern. There's no other word for this. This does not, I haven't used the drawing tool all night, but I'm going to draw something in here real quick. So this whole collapse here structurally has some issues. And this is what I think we probably get. I've told you before, this is $62. This is the 200, which is roughly, I can't see it right now, but it's roughly 58. So 62 to 58 is a buy zone. But here's my concern. See if I can. So what my expectation is that market's going to stay within this oval, and what we should get then, what we should get then is this going forward. Hang on. So this would be a continuation from here. We'd get, this is where the red dots are forecasting, and then we'd get one more low. We probably stay above here, and we get what would be from an Elliott viewpoint, ABC, X wave, ABC in red, and then the next move would be magnitude would be moving back up in here. We could get double zigzags. This could be a long consolidation. If it breaks this red line here, then it's going down into this range, and that should be where it holds. And that's like 58.60. But this is going to be an elongated process. You know, waited for years for silver to blow up, right? And it goes up. It does this and literally removes the entire move in 3 days. It's pretty classic. And I know those of you, if you didn't see my silver report, read that, because this was in that parabola situation, and we got into an exhaustion place. And that's the other thing I've got working for the scripts for the indicators is the how to trade parabolas. And it will actually, once you drop the data, it will actually tell you all the points. It's going to tell you the exhaustion ranges, the rejection points, where the holding, it does all that. That whole presentation that I did on silver was built out of that algorithm. So that's going to be included. I'm going to start, it's going to be a free, like I said, that part will be a free, where you can get the scripts for WaveTech and scripts for different types of patterns. So any stock that you see going crazy to the upside, it should be able to figure out or come into ranges where the exhaustion point. So as I said before, when you see silver like this, when it rose like that, it's like the old biplane show you go to see where it flies vertically up until it doesn't have enough power and then it just falls out of the air. That's what happened here. It 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 was taking, so once you get to a certain price level, it takes multiples of the buying to maintain the curve. And once it gets to a point, it's theoretically not physically possible from the math to find that many more buyers to keep the price going. That's why every parabolic curve ends like that. And that's what that article was writing more about, price action and probabilities. Used silver as an example and ended up calling the high within a dollar or something. But that's not the brag point. The point is you have to understand these parabolic curves. There's two regimes, trending and parabola. When the market extends so far above moving averages that nothing that you know, me, my PPMs, nothing tells you how to trade that market anymore. It's a completely different regime with different rules. So that stuff, that's out there in the article. Soon I'll have the script out there to go along with some of this other stuff I'm doing. So I feel like I'm finally adding value to those of you that put out the money to buy the indicators. And of course, you haven't seen it yet, but you will. And once we get this new membership, these are all free scripts. You're just going to download. You got to have a Claude. It'll tell you all the criteria and things that you're going to have to run them. So I'll leave it for that. But this whole silver regime, this is complex. It's going to take, when a market gets broken this hard, gold broke, but it didn't do this. Whenever something gets broken like this, it's just the math has to come back together to be able to predict where the next turning point is. We are not there yet. I don't think we're going to get there anytime soon. I think we're still end of March, April, maybe we can etch out this pattern that I have on here. And we'll see what unfolds. The markets are always right. You're wrong. So you have to reevaluate as we go down the trail. But this is the expectations based off what the indicators are telling us and you broke all the way down below this low over here. When you went down, you took out that whole last rally. And markets that are going to go higher don't do that ever. You might be able to find an example on some penny stock, but not on major markets where there's lots of participants. Once they break like this, you broke a whole lot of people. A lot of people probably got hurt more in silver than folks got hurt in Bitcoin. All right, let's erase this. Final market, then I'm done. So as I discussed the other day, Bitcoin's got some hope here. And you can see that one second. So you can see here, algos on the 10 are flat, which at the moment is negative. A little scary because if we don't get above the 21, I would say before Friday, then we're going to have a problem. The next leg down could be retesting this 59 low. Now in this exchange, I guess depending what you're looking at here, it is 59,930 I have as a low, so call it 60,000. You get to 60,000, it won't stop there. It's on its next level. down to probably not below 58, probably 52 or lower. But for the moment, the setup here is suggesting that most of this should be over by the end of March. If we can hold the lows and the numbers, then we got a shot. We do have a pivot point at 81,000. So you get a shot to 80,000, we'll call it, round everything off. We have Fibonacci targets in here right now, confirming that the Fib target's 73,500, I'm rounding off, 75,500 and 81,800. So that would get us up to test this 40-period moving average. And if, depending on how long that takes, if the indicators take this path here, then you're probably, you've got a good solid 4 to 6 weeks. All you can hope for is that probably even this low here holds, which is 65,000. And if that breaks, then you got to test 60. If that holds and we can get back above this 21, the algos are suggesting, and it's still negative here. There's a shot at it in the next couple of weeks if we can get above here. But it would look from bars, from a timing standpoint, we're probably 3 to 5 days. We need to get above this 21. If we can't get above the 21, then we probably roll over through the number I just mentioned, 6580, but just call it 65,000. If we get through that, then retest 60 and hold your breath. All right. Thanks for all that, folks, and you're patient for an hour and 20 minutes. Wish I could say what I want to say faster. I know everybody wants me to. But would you? I'm giving you full analysis. Hang on one second here. All right, let me... Yeah, so, I mean, you already have the system to do stock selection. It's called ChatGPT or Claude. You just have to know what you're trying to select. Styles, what metrics are you doing? But there will be, one of the things that I'm going to build in a bit later in the system is that it will do a review. So you'll have a script for quarterly review. It will review all your positions. It'll look at the numbers, whether they're in accumulate or hold. It's going to be analysis of your holdings. And then if you already have your screening, you can put that in and it will choose which stocks need to be replaced in the portfolio based on holding periods and returns. And so it'll give you a list. And I wish I could turn this one function on because it would be real easy, but I guarantee you, because I screw it up, that if I gave it to you folks, we have a function inside on the admin side of WaveTech that you can actually load up a constituent list and a start-stop dates and take stocks out, and it's literally cut and paste. And it works pretty good, and I've done it using Claude. But I guarantee you, if I give it to you, somebody will forget to do a backup, and you're going to lose everything, and then you're going to be mad. And because it's still kind of it's a wonky, system that was built, 25 years ago. So it does everything right, but it's easy to screw up from a user interface. There's not good protections for you not to screw up your portfolio. So, all right, let me see what else is out there. Yeah. Appreciate the analysis, Iron Trader. Let me see here if there's any other questions. Yeah, silver's going to be a play. Yeah, bear flags. That's old school. Who cares? Let me see here. So, Floyd, are you talking about the Japanese banks on Richard Werner's work? I'd love to meet that guy, actually. I think my buddy Hugh Hendry knows him. I should reach out to Hugh, see if he can make an introduction. You guys reasonably quiet tonight. Yeah, I think the options idea is good. If I can get Charles to come on board, that would be amazing. He and I would just work on some scripts, put them out there, maybe do a video together to explain them. But he is the master. If you want to see his books, you can go on Amazon. Charles Cottle, Cottle. He's got some pretty good options book. I always joke with him, I wish he'd write one that I could understand, meaning he's way smarter. He's the true guy. Okay. Yeah, that was all on me. I couldn't believe that happened. I was super tired. Right? That's one of the problems with me writing the letter. That's only happened once before. And when I came in, thanks to Bo, he sent me a text like, "Dude, you okay?" And and I saw that and went, "Oh my gosh!" I went and looked, and there was actual send. It was still in the queue. The send button did not get pushed. I would have swore I did that. I should have, but I was like super like zombie eyes when I was finishing that last night. So that won't happen tonight. Anyway, I think I've got most of the questions. Yeah, Floyd, on how do we make a composite? I believe, let me just find this. I'm pretty sure we released this. Maybe we didn't release it. I'm just looking here real quick. I thought we released that. I'll have to look and see if that would be a big cluster to try to distribute that. Yeah, I'm sorry. Maybe I spoke out and shouldn't have. Yeah, because it would have been, maybe I didn't release that indicator. And I'm not on the primary account that runs that. I'm on a secondary. I have multiple TradingView accounts. Yeah, I'm just looking here. I unfortunately I don't see that script. I'll look for it. If I find it, I'll have to figure out. Yeah, it would be very cumbersome. I'll have to ask my IT guy if he thinks there's a way we could add that out. Everybody could have it if they want it. You could, yeah. Yeah, I thought it was there. I apologize. I'm looking at all the scripts that I delivered to you folks, and I'm not seeing it at the moment. I don't see it. I would have swore we put that out there. I'm just looking one more thing. Bear with me a second. Yeah, and I don't see it. That's a shame. So I apologize for saying that. Yeah, I can't comment on this channel that on this screen I'm on. Let me just look at something. Yeah, you'll find if you go to Amazon Books, I think you can just search Amazon, Charles Cottle, Cottle, and he's got, I think, 2 or 3 books out. And I don't really have a suggestion of which one, but probably the one that he talks. He's got a whole course out there as well. And I don't know if he's still selling that even, but he did for many years. Yeah, but I know the books are out there. There's one, I think the very first one is like financial art. He's showing you what butterflies look like in math and drawings. I know he's got some of that stuff hanging in his place, in his office. Yeah, we both used to live in Sedona at one stage. So anyway, all right, folks, that's it. I'm glad we were able to get this off tonight. Sorry about the newsletter. I would say there's 1 in 255 possibility for that to happen again. Because I think I did one last year like that happened. Not sure. Just need to get to work sooner. All right, folks, hour 30. Thank you for hanging out. Appreciate. I see some of you that were here in the beginning and are still here. Yeah, so yeah, let me know what you guys think about that Vegas idea. I'm looking for maybe 30 to 50 souls, not a big giant meeting. If lots of people want to show up, that's fine. I'll pre-sell so we know when it's going to happen. It'll probably be nice and hot by the time I can organize this thing. Might be able to get it done. As part of what I'm doing on the whole seminar presentation is I'm doing a very thought out, high def cameras, cinematic ways of presenting the concept, and then I'm going to teach the concept in the seminar. But everything's going to be laid out. You'll get a copy of the videos, the PDFs, the manuals. There's multiple things I have to produce to do this, and I need to do this before I sell it to you, so I know I can show up and do this. But I think it'd be fun. I love chatting with you folks. That's why I do an hour and a half, because a lot of good questions usually, and it appears that you folks have a decent attention span, so that's good. But yeah, so I want to do this. Like, it'll be probably one full 8-hour day, and then I'll truncate day 2 at 4 at 70 something. If I can pull off 12 hours in 2 days, which I probably can, that'll work for me. But I need to make sure that the load works, because especially when I take this thing on the road. So I know I've already got like between 10 and 15 people that I've contacted otherwise for London if I do it. So yeah, so I'll put everything together. I think what we're going to end up doing is I've got multiple websites. I'm going to clear out a bunch of those. I'm just like cutting everything down so I'm not spread all over the place and you're trying to find what website you have to go. So I'm going to consolidate everything into one. So whole new web environment, membership, free scripts, pay stuff that we're doing, whether it's WaveTech and some of the other things. All that will be spelled out and nice and clean, hopefully, 2026 style. I think probably the last website I did was maybe 2022 or 3. So everything's just outdated, messed up, and I'm going to get all the URLs that you might have known to go to one spot. So a bunch of stuff we have to do, but it shouldn't be too terrible to get it set up, because I think what's ultimately going to happen, it's going to give you folks some real ability, some real guidance on how to do the all the indicators. Here's the other thing, just real quick. I know I'm still babbling on. I said I was leaving. The things that I want to do with the scripts, where you can also ask and you'll be able to do this because you're going to have the TSX or the JSX files. So I'll have a video on how you can take whatever I give you, that core script. You'll be able to take that and even ask things that maybe it didn't tell you want to know. Say, can you tell me with whatever? And maybe we'll even put some prompts together that you can be able to use, because I think ultimately, TradingView probably needs to really enjoy their success. I think a lot of things are going to change in the next couple of years. I think within 5 years, there won't even be a thing called a website. I think websites will be history. Anybody will use them or need them. So there's going to be a whole different configuration of how the web works and how we work with the web, and that's all going to happen through the LLMs and some of the other stuff that's out there. You'll probably be able to have built in or something, having agents doing a lot of analysis for you. It's not going to be like it is today. That's one of the things I'm working on, some agent stuff right now as well. So if you do have WaveTech, you have questions, you're going to get answers. I can't keep up with things sometimes. So just like it'll take me a delay. So all the delays, everything's going to change here as well in the next 6 months, so that this place runs a lot smoother. The stuff that we used to do every day, folks, we don't need to do anymore. Oh, one other thing. I'll put it out there for you lucky folks that are here. One of the things I'm going to be looking for here in the U.S. as well, but on the European and Dubai tour, is if you want to come free of charge and be kind of a team member to maintain everything that we're going to need to do. So I'm going to be looking for a couple of people to show up and help me work, and we'll do a lot of pre-stuff working together on those locations. And you could even be somebody who wants to follow me around and be in London and Frankfurt and then Lugano and then Dubai. So, just info at Kendall Report, probably the best place. I got one situation I'm working on there that will clean up that inbox, because right now all of my Substack notes and stuff are going in there and it's impossible. So I'm starting to parse out into that to segregate that box. So it's been kind of a mess. So anyway, folks, I appreciate everybody hanging out. And we'll go from there. All right, folks, have a great evening. Talk to you soon. Tomorrow, same time. See you then. Yeah, whoever put that out, that is the book, The Risk Doctor. Yeah, Charles was a master. Thanks for looking that up. I appreciate it. Hey, Bo, thanks again if you're still listening. So, Tommy, if you guys can hear me over the music, I wish I'd have saw your question earlier. I would have answered that. Maybe ask it again tomorrow night. Is on the different directions of what the indicators are telling you. They're actually, if you understand them, that's why I'm building these scripts. Hopefully you guys are hearing this. That's why I'm building these scripts to cut through some of the nuances of using them.